Now, understanding these very basic principles is super important to trading and everything about trading. Understand when a market changes its bias. So, for example, we have a bullish market on our left and the bias changes to bearish, back to bullish, and back to bearish. Being able to identify exactly how. It's easy to identify everything that's right in front of us. You can see on the left, price has gone up, it's come back down, it's gone back up, it's come back down. That's easy to identify, but being able to identify these things in play is what effectively will make you, as a trader, be able to make effective choices and good decisions. So at what point did this bullish market turn bearish? Is it when this big, strong, bearish candle came into the market? Would you be looking to sell instantly just because you've seen this big bearish candle? The first thing you need to look at is what makes a bullish market. Well, a bullish market is higher highs, higher lows, higher highs, higher lows, higher highs. And that's the same in reverse for a bearish market. So you need structure to change. So as you can see at this lower low here, this is putting a support in the market. So what we're looking for, if price breaks below, which it did here, comes back and retests and then bounces off again, we're now in a bearish market. So essentially, you could start looking to sell around these areas, where this candle is tested here or where we've got this bearish candle. If you scale down, you'll more than likely see a little bit of consolidation. You can then take the leg of this candle, which is a 4-hour candle, and you can take it down into this low here. So you've got this range to play with. Now, once again, as a trader, you'd be anticipating this low to be broken in order for it to continue its bearish structure. So once again, we've got another leg down. That comes into this low right here. The market sentiment then begins to change again. So it goes from bearish, where you may have got one or two opportunities in there, to bullish. So the market consolidates. We're in a consolidation here. And the moment we break above and create more structure again is when we then go, okay, the market sentiment has changed. So we're sideways here. There's no real bias. We break above and we sort of fall back in. Then we break above again. So we've put in the higher low here. We've got double highs here, otherwise known as a double top. So people would be like, oh, okay, it's going to continue to sell off. And you may take a sell trade here and you get stopped out, but that's fine because you've just had 2 wins over here. So you've got, say, 4 to maybe 5% over here, and you've just taken a 1% loss. Now the bias has changed again. The market's continued to push up, and we've put in a higher high, a higher low, and a higher high. So the sentiment has changed again because we have taken out this high here. We've put in a higher low, so it's higher than this one. So the market's starting to rise again. And then we've put in another higher high. So we've broken above. So you could be anticipating maybe to go back into this high from the break above. So your break above structure is here, and you're anticipating price going into that high. Now that is enough to potentially get a 2.5-hour trade on a lower time frame. So you could target this area, and we've broken above. So we're like, okay, the bias has changed to bullish again. And then we've consolidated a little bit more, building up more buyers to come into the market. Once again, you break again, and you could target this high here. And as you can see, price doesn't actually come back to that point for a while. You could probably get maybe 4, maybe 5R out of that position again to the leg up, using our structure to the left as our target. So once again, we're using this level here as support. If we break a low and we put structure in, we will start assuming the market's bearish. Once again, same as over to the left, we had a huge bearish candle. Now, we wouldn't just start selling because we've seen this candle. We need confirmation that we are actually going into a seller's market. So we've come back and we've retested this area, and we've put in a lower high. So once you've broken structure again, you can line up your targets. You could target this low here as your first low, because this is where structure was earlier, and there's a support level there. This is what was one of the main causes of the market pushing higher over to the left. So we know there's going to be a lot of orders waiting around here for potential buys, and potentially we could have a pullback. So we don't want to extend past this level. And then when we break that level, we can look for more shorts. So once again, we take the break, we ride into this level, and we anticipate price to go lower. So this would technically be a consolidation on the higher time frame, but as traders, we're looking at the 4H time frame here, as I've revealed. We're just looking at current trend, scaling down, and taking advantage of current trend from that time frame. So, for example, it's bearish here on a 4H, so we're going to be looking for sells on, say, the 15-minute time frame. So that is the basics of how structure works, and taking these very simple but effective principles will allow you to start building your strategy if you haven't already, or if you do have a strategy and you're struggling, maybe this is something you need to go back to and look at and understand. Okay, maybe I'm buying in the wrong market, maybe I'm selling in the wrong market, or maybe I'm trying to trade a consolidation. So understanding these things, because it's subject to strategy. Some people may look at the daily and go, okay, well, we're consolidating. Some people like myself who use the 4H to determine trend, because I'm trading on the 5-minute time frames. My entry criteria is on the 5-minute time frame. So I'm looking at current trend. I don't really care. It's pointless looking at price action all the way over here on the left. I just care about what is the current trend of the market. So you kind of just look at this, and then you use whatever price action you've got before to determine targets. It's quite a simple principle. I like to keep things simple. I don't look for liquidity sweeps. I don't look for bankers stops. I don't look for any of that bullshit that most of these traders talk about. My strategy is effective. It's simple, and it's based on structure. So yeah, if you guys got any questions, leave them in the comment section down below, and I will get back to you as soon as I can. Appreciate your time. Hope you enjoyed the video. Don't forget, leave a like, comment, subscribe, and join our Discord for free content where you can be involved with myself and other traders.